Hi, everybody. Welcome to another edition of Moving Markets. Today is May the 9th, 2019. We're coming to you post-market today. Instead of during the day while the market is open, we're actually doing this presentation a little over an hour, I guess, after the market has closed. So let me, if you're listening to this and it's in the afternoon or evening of the 9th, then obviously you know what happened already. I'll recap it maybe for those individuals that are listening and they haven't watched or paid attention to what went on in the market. We're going to talk about more about what moved it than what actually happened. What happened today was in the morning. Well, let's go back to last night. So without rehashing everything that happened up until last night, we've got all this stuff going on with the China trade wars. And last night, Donald Trump may have made things a little bit worse. I hesitate a little bit in the way I say that because Donald Trump is just being Donald Trump, plain and simple. Nothing more, nothing less. It's just Donald Trump being Donald Trump. And he got in front of a rally. I think he was in the panhandle of Florida. I want to say Panama City, Florida. I think that's where he was at. And he was touting the economy, rightfully so. He deserves the credit for where the economy is at. He talking about the economic numbers that came out last week. We talked a lot about those as they came out last week. We talked a little bit about them today, earlier this week. We talked a little bit about them and about, I at least talked about my disappointment in the fact that in spite of such good numbers, this trade talk and this trade war stuff really put a damper on the markets. Right now, depending on what happens tomorrow, we're on pace for probably the worst week that the U.S. stock market has had since we had that horrific week leading into Christmas last year. That could all change on a dime if there's a good move up tomorrow. So it's a little premature to say, you could, on one bad day on Monday, you could say we're on pace for the worst week, and then it could all turn around and be up from there. So even with this being Thursday afternoon and only one more day of trading this week, it's a little premature to say that, but it's reality. I mean, that's where we're at. So Trump's in front of all these people, and he firebrand throwing out bombs. He basically says the Chinese have gone back on everything they said. They're blowing up this deal. I can't remember right now the exact words that he used, but he basically said China's backing out of everything they said they were going to do. Well, we kind of already knew this. This wasn't new information. We got reports of this. We had an inkling of it when he tweeted on Sunday night, set the markets in a tailspin on Monday, only to recover quite a way and have only 66 points down on the Dow on Monday. Then the real slide took place on Tuesday. Ugly day on Tuesday, down for. Remember, we were saying when we were talking on Wednesday morning, it was a crappy market day when you're glad that you had a 200-point rally at the close that took you to only being 473 points down. So Tuesday was without a doubt incredibly ugly. Wednesday, the Dow actually finished ever so slightly in positive territory. Spent a little bit of the day up, a little bit of the day down, and then it finished actually in a little bit positive territory. And that was, I thought, really at the end of the day on Wednesday, I really, truly thought that the dust was settling and people were going to kind of sit on their hands for a day and see what happened with the talks and the negotiations that are going on today and tonight. And instead of that happening, Donald Trump went out to his rally in Florida and basically said, we got to hold these guys accountable. We got to hold their feet to the fire. They're reneging on everything they said they were going to do, and we can't stand for that. So this morning, Dow was pointed down in futures, 220 some odd points. And things started to go down and they started to decline quickly after the opening bell. I think for a couple seconds, the Dow might have looked like it was going to make a little bit of recovery, and then the slide just got worse and worse. Around 9 o'clock Mountain Time, this would have been in the neighborhood of 11 o'clock on the East Coast. The Dow Jones Industrial Average, I believe, was down somewhere in the neighborhood of 450 points. It was going toward, certainly moving steadily towards being 500 points down. I got to be honest with you, I don't know if the Dow got down as far as 500 points today because I had to leave at 9 a.m. my time. and I did not get back in front of a computer until just after the markets had closed. And lo and behold, the Dow Jones Industrial Average is only down 138 points at the close. So obviously we made more than a 300-point recovery. This is, in some ways, this is better than Tuesday. You know, when we were talking about a 200, well, it's better in the fact that the Dow was only down 138 points instead of only down 473 points. But, you know, you think about the numbers, a 200-point rebound or rally at the end of the trading session on a 600-point down day means you got back about 30% of that. I'm rounding numbers, obviously. But when you come back more than 200 points on a day that you were down 450, you know, you're talking about a 45+%, coming more than 45% off the day lows. And that's good. That's good news. There's no getting around that. You can't spin that into anything other than some silver lining. And the bad news is we were still down in the markets today. That sucks. But things came back a long way. A couple of things of note. Disney reported their earnings yesterday. They beat analyst expectations in earnings per share. They beat in revenue. They're guiding well. Everything about that report was positive. In the aftermarket trading that was taking place right after Disney reported, they were jumping up pretty nicely. I mean, they were up, I think, I want to say 3-4%. They opened this morning a little bit to the downside, clawed their way back into positive territory, and then unfortunately, they finished to the downside. They finished down about $1.35, $1.34, somewhere in there. You got to believe that Disney really, truly just got caught up in the slide of the market, because there was no rationale, there was no logic for Disney to be trading to the downside. So I think we're going to add to our positions in Disney. I think we're going to get into some more bullish positions in Disney, because there's a huge upside for this company. I mean, I even trading at $133 and some change per share. Disney has room to go higher. I really believe that. They've got a phenomenal summer lineup. They've got the last installment of the latest Star Wars trilogy coming out in the summer. They did phenomenal numbers with their Marvel Endgame, Avengers Endgame show. I went out and saw that a couple of weeks ago. Great movie. Whether you no spoilers here in case you're one of the 3 people in the world that hasn't seen it yet. I'm just basing that on the numbers that they've drawn in. There's got to only be 3 or 4 people left in the world that haven't seen it, but they've got this phenomenal lineup. They're doing a live version of Aladdin coming up this summer. They're doing a live version of The Lion King. These are both incredibly popular movies, cartoon movies with Disney that people are excited about the live versions. The previews look really good. There's something else that I'm forgetting about that they've got queued up, but then they've got the Star Wars at the end of the year, and they resurrected. Okay, I just threw out a little bit of spoiler for Endgame. A number of the characters that we thought might forever be gone in the Infinity War Avengers movie, they've done enough to revive and create a situation where they can do more of those movies. So I won't say any more than that. And come on, if you're ticked off that I've inadvertently done a little bit of a spoiler, don't tell me you hadn't heard that already. And besides, I'm talking to the 3 people who haven't. I don't even know if they watch my program. The 3 people who haven't seen the new Avenger movies, they might not even watch my program, so it's irrelevant. So that's, Disney ought to be moving to the upside. I was really pleased. I was disappointed with the fact that they finished to the downside. And again, I don't see the rationale behind that. Their numbers were such that they should be moving to the upside. I really think they're just caught up in what the markets have done overall. The other company I wanted to mention specifically is Apple. Apple had a rough start this morning. They were way down. They were down $5, $6, maybe $7 a share at one point in time, and they briefly dipped below $200 a share. Now they're still down. They finished down, I think, $2.30 a share, somewhere thereabouts. But they stayed above 200. I think 200 right now is an incredibly key level of support with Apple. You look at their multiplier, you look at their valuation, you look at the numbers that they reported last week. Apple, in my estimation, should be trading at $230 a share or more. But for them to, in spite of this major sell-off the markets are having this week, and it could get worse tomorrow, there's no question. Apple is very affected by what's going on in China. Apple has maybe more exposure than the average company to what's going on in China, because Apple is relying on the Chinese market specifically for a lot of their growth and a lot of their expansion. Without that, their growth is going to be numbers that are barely registered. They're still going to make a ton of money. They're going to make a huge amounts of revenue because they've got multiple revenue streams now. And Apple is relying more on services now than they are on just shiny, bells and whistle products. But without China to expand into, Apple's going to have a tough time. They're going to their numbers will slow down. They'll still be a profitable company, but their numbers are going to slow down pretty dramatically. So we kind of need Apple. We kind of need this China stuff to work out for Apple to stay on the rise. With that in mind, Apple held $200 per share as a level of support. I think that's really key. I think the fact that in the midst of this huge sell-off this week, they managed to stay. They got below it during the day today, but they managed to finish above it. Tomorrow is going to be key. And let me that kind of segues perfectly into, let's spend the rest of this episode talking about tomorrow. So tonight at midnight, I believe it's midnight East Coast time, but it doesn't matter where, midnight somewhere tonight, tariffs are supposed to kick in. The new tariffs that Donald Trump mentioned on Sunday, they got officially and formally filed either Monday or Tuesday, and they are set to take effect at midnight tonight. Tariffs on over $200 billion worth of Chinese goods that are shipped in here to the United States increase from 5%. So that's more than a double increase. In fact, that's 150% increase in those tariffs. Now, let me talk for a second about tariffs. The word is ugly. The word invokes fear into people. It's a way of saying international taxes. I don't know why they don't just say international taxes. It is quite simply put a tax on the goods that China is shipping over here to the U.S. When they put a tariff on our goods, it's things that are manufactured here. We ship them over there. We have to pay 10% on top of the cost of the product just to ship the stuff over there. So now we're charging them 25% on the stuff that they're shipping over here. A couple of things to keep in mind. A lot of what is being shipped over here is products that are manufactured in China, but they're manufactured for U.S. companies. So a U.S.-based company like Apple, they produce an iPhone that they're going to sell you for $1,000. Probably cost a couple. I don't even know if it costs $200. It might cost 75 cents. I probably not. Probably a little more than that. But let's say for easy math, let's say that phone that they're selling you for $1,000 is costing them $100 in material to put together one of those phones. Material, labor, everything. So Apple has those iPhones shipped over here that are made in China. On that dollar, right off the bat, there's a 25-cent tariff put on there. There's 25% of that dollar now has a tariff put on it. So the question becomes, who's paying that 25%? Is China paying that 25%? Is Apple paying that 25%? And even before you make the determination of who is getting hit with that 25%, who ultimately pays for it? At the end of the day, it's likely that you and I are going to pay for at least part of that tariff. So the reality is, Apple is paying China $1 for that phone. It's being made for Apple, but it is a Chinese manufacturing plant that's making that. They're the ones that have got to pay that tariff, but I guarantee in order to cover that tariff, they're going to raise the price of that phone, and they're going to charge Apple more money for that phone. So ultimately, Apple then becomes the ones that pay for it. And then Apple is going to look at that and say, well, it may not seem like a lot, but we're going to pass that along. I said 25 cents, $25 on a $100 phone, $25. So Apple has got to find a way to do one of two things. They either absorb that entire cost, or they've got to pass part or all of that $25 along to us, because these Chinese companies are going to pass it along, at least some of it. Now, the reason we say these tariffs hurt China more than they hurt the U.S., there is some rationale in that. There is some logic in that. Apple already has contracts in place to pay $100 for these phones until the next contract is negotiated. And I don't know, I'm just using this as a kind of semi-hypothetical example. I don't know when the next contract is due between Apple. They probably orders in place for Let's say there's orders in place for 1 million of these iPhones at $100. Well, China cannot automatically start, whatever Chinese manufacturer over there is actually assembling the phone, they can't just automatically say, hey, we got a 25% tariff. These phones are all going to cost $125 now instead of $100. Apple's going to say, wait a minute, you have a contract to fulfill these million handsets that you're already in the process of producing, and you're going to send them over our way. You can't start charging us for those ones. The next order, you might need to bump it up to $125. And then that's what we'll take and pass along. So initially, China does, in fact, get hurt by it. They're the ones that right up front, they have to pay for that. That's why Donald Trump says this is putting billions and trillions of dollars into our coffers. Well, he's exactly right. Until the next time Apple tries to negotiate with China, and then China is going to build in part or all of the cost of those tariffs into what they're charging Apple to build that iPhone, and then Apple's going to take part or all of that and pass it along to the consumer. Ultimately, the person buying the next iPhone is going to pay a little bit more for it. This is a guess, and I am taking this from someone that I heard, a market analyst that I heard on CNBC. He said that for a 25% tariff probably equals somewhere in a 5 to 10%, somewhere between a 5 to 10% increase in the cost of goods to the actual consumer. So don't assume that we don't pay any part of that tariff, but don't assume either that we meaning the consumer, we meaning the person who's actually buying the end product. Don't assume that we pay all of it either. A 25% tariff on goods coming over from China means that if we're going to go out and buy a $1,000 iPhone, maybe we're going to have to pay $1,050 right now. Maybe we're going to have to pay $1,100. Well, at the end of the day, if you're paying $1,000 for an iPhone, you're probably going to pay $1,100 for it. If you're paying $1,000, you're probably going to pay $1,050 for it. It sucks that you have to pay more for it, but that's not a huge amount of money to absorb. That's not a ridiculous price to absorb. It happens. It's part of life. The price of things go up, and if it doesn't go up because of tariffs, companies find other reasons to increase the price of things. So, you might be sitting back at home, you might be listening in the, on the radio, or you've downloaded your Apple podcast or your Stitcher podcast of this presentation. And maybe before this, you're thinking, well, how does that tariff really affect me at the end of the day? Well, at the end of the day, other than the impact it has on the stock market, the way it affects you is you've got to expect on goods coming over from China, you're going to pay a little bit of an increase. You're going to pay a little bit more money for that next TV you buy. You're going to pay a little bit more money next time you have to replace your refrigerator. You're going to have to pay a little bit more for the next computer, the next iPhone, the next earbuds that you buy. Whatever it is, if it's made in China and manufactured, even if it's for a U.S. company, if it's manufactured in China and shipped over here, tariffs going from 10 to 25%, and that money gets passed along to us. So, or at least some of that money gets passed along to us. So, keep the tariff thing in perspective. This is a way for us to force China back to the table. This is going to hurt China more than it's going to hurt the United States. Even if China does a retaliatory, and they're already claiming they're going to, even if they do a retaliatory tariff increase, we import more of their goods than they import of our goods. So it just simple mathematics say that they're going to be hurt by this more than we're going to be hurt by it. So that's where we're at. Now, let me give you one little prediction on what I think is going to happen. I don't believe that there's going to be an 11th. I think I mentioned this yesterday. I'll say it again today. I don't believe there's going to be an 11th hour halting of these tariff increases. I'm not saying it couldn't happen. I'm saying this is my opinion. I don't think it will happen. I don't think sometime before midnight tonight, we're going to hear that everyone has hugged it out, that Donald Trump and President Xi have been on the phone, and that the vice premier that's here for the trade negotiations has shaken hands with Lighthouser and Kudlow and said, we're so sorry we tried to pull things back. We're so sorry we tried to renege on the deal. We've learned our lesson. We'll go back to negotiating. I don't believe any of that's going to happen. I do think the impact tomorrow. Now, what I think could happen, that's what I think is not going to happen. What I think could happen is there could be some commentary that comes from the White House or some White House official tonight that says, we're back to negotiating in good faith. We still have some work to do. The tariffs are going to go into place at midnight, but if we see a couple of positive things happen quickly, we're willing to discuss removing those tariffs as quickly as we put them in place. Something as simple as that. The follow through on the tariffs to show the Chinese that we're serious, but a willingness to quickly pull back those new tariff increases if they'll start to play ball again. Something as simple as that. You could see a 500 point up day on the Dow Jones Industrial Average. I think what is more likely is that nothing more gets said tonight, other than maybe a comment about we're still talking. I think it's likely that you'll hear someone say, well, we've got a ways to go, but we are still talking, and not comment on the tariffs going into effect at midnight. And the market's not going to react favorably to that, but I think the majority of the negative reaction has taken place. I think between a 473 point sell-off on Tuesday, 63 points on Monday, there's 520 some odd points, another 130 something today. We're sitting at about in the neighborhood of 650 point drop on the Dow. At the beginning of the week, we were up around 27,000. 650 divided by 27,000. I'm guessing on that. We're down maybe 3% on the week, somewhere in that neighborhood of 3% on the week. Folks, that's not the end of the world. 3% in a week it's a blip on the radar if you've got it in your rearview mirror and we get back 3%, even if it's over the next 2 or 3 weeks. Then a 3% drop, or even a little bit more than a 3% drop this week, looks like a blip in the radar. The worst thing that could happen is that the two sides, after negotiating today, and I guess the vice premier or whoever heads the delegation that's over here right now is supposed to have dinner with Trump and his family at the White House. If the two parties leave dinner having thrown soup in each other's face, if they are bitter and upset about what has gone on, and they're walking away from the negotiating table, even if just for a time, even if just for a brief pause, that is what could send the markets down another 300 to 500 points tomorrow. And it's absolutely possible. I'm not predicting that any more than I'm predicting everyone is going to hug it out at the end of the day today and say everything's great and we love China and we're close to having a deal and they're back to the negotiating table and they're so contrite and sorry about trying to renege on things. I don't see that happening, nor do I see the situation where the deal is dead in the water without much of a hope of moving forward from this point on. I think you're going to get somewhere in between, and I think the in between is going to cause a volatile but ultimately flat day tomorrow, kind of like we saw yesterday, where we were up as close to 100 points. We were down over 100 points at one point in time. We finished with the Dow up 2.5 points. Not even, I don't even think that's 1/100th of 1% was the total move on the day. I think tomorrow has got something similar in store for it. So that's going to wrap up moving markets today. Thanks, everybody. We'll see you back here tomorrow. Bye-bye.